I am here today with the CEO and co-founder of OfficeRnD, Miroslavov. Miro, did I say your last name correctly?
Yes.
All right. So this is a treat because, well, you and I did a little kind of co-keynote for your Flex World conference this past October, and we get to hang out on the GWA calls. Miro is a board member this year on the Global Workspace Association, but we don't get to sort of catch up, and I have some questions about your background that I want to get into. So Miro is joining us from Bulgaria. And Miro, what time is it for you? It's in the evening.
So it's 7 p.m. in the evening. Yeah.
7 p.m. So he's spending his after dinner time with us, which is also an honor because he has a new member of the family. How old is your baby now?
It's just 42 days. 42 days.
42 days, yes. So
it's a real newborn.
Yes, Miro is living through new daddom, and we talked about that a little bit in the pre-chat. So he seems pretty coherent. So hopefully we'll do just fine. We'll cut you some slack, Miro, if you need it. But Miro, OfficeRnD has a lot going on. So I want, just for anybody who maybe isn't aware of what OfficeRnD is, I would just kind of love to have you, give a quick intro. I will mention that I run a program called the Coworking Startup School. Lots of those members use OfficeRnD. I run a program, kind of a mastermind program for operators called the Flight Group. And lots of those folks use OfficeRnD. We actually had our own OfficeRnD interest group running for a while. Hannah Mosteller, who recently moved from Atlanta. Well, she was at Fireworks in Atlanta and recently moved to Industrious. She was running our interest group. So lots of OfficeRnD fans probably listening, but yeah, tell us a little bit about OfficeRnD. And then I would love to hear just the short version of the backstory of how you started OfficeRnD.
Well, totally. First of all, Jamie, thank you so much for having me here. It's always so good to see you, and now it's amazing actually to have a chat about what we are trying to do, and yeah, I just spent some time. So briefly about OfficeRnD and why we started. So I think probably most of you know that we are trying to build one of the leading flex space management platforms out there. We started 2015. Actually, the very first idea was to build a platform that's more like a corporate workplace management solution. That was the very first idea because we came out of a relatively big software company, and we thought this wasn't managed properly. So we can actually build something better to manage the workplace of a very fast-changing, dynamic company. And with that idea, we relocated to London because we were invited to join an accelerator there called Pi Labs, which is Property Innovation Labs. And we ended up in a co-working space called Second Home, which was incredible. I think it was probably at the time one of the most iconic spaces out there with the most beautiful design and a lot of hype around that. And we just fell in love with the concept. Also, we are coming, both me and my co-founder, who is also called Miro for simplicity.
Yes, I forgot to mention that, but I remember when I first met your team, I was like, wait, they're both Miro?
Yeah. Yeah. It's not that popular name here, but yeah, anyway. So we're coming from the software industry, and we thought, we've seen firsthand the change from a traditional software to software as a service. What a huge impact it made on the whole world, not just the software industry, but the whole world. Dramatically changed of how people use software, and the quality of software increased so much because when it is as a service, you can change your software easily and get a better high quality software without buying the whole thing over and over again. So we saw the same concept in the co-working space, and we thought that space as a service, it's so much better and office as a service because it actually creates competition, and it creates better service for the end customer. So the end customer can choose the space, and if they're not satisfied, they can move to another space and so forth without the commitment.
Consumerization of work, right? Like of the office,
exactly.
which was a big shift at that time. Yeah.
Yeah, and we thought this is just incredible, and we decided to focus our whole attention on building our workspace management platform from a generic, let's say, workplace management into co-working space management. Yeah, ever since we've been focused on solving the problems of the co-working industry. There's so many and so big. 6-7 years down the road, we still have like a massive list of things to work on and to improve. It's an endless game, but we're super excited where the industry is going, and obviously now with COVID, despite the super difficult 2 years, we are extremely bullish about the future and where our industry is going to.
Yeah, and I should have, before I dove right into your intro, that's what we're going to talk about today is you have sort of, committed to data analytics and sharing some of that with the industry to help give some insights around what's happening out there. So you've created a FlexIndex, which we're going to talk about today. And I love the name and some specific KPIs that you're tracking that can help folks understand kind of where the industry is trending, where we're going. So in 2015, that was a kind of a big bet. You showed up at a co-working space with sort of one angle on what you were doing. And then you said, we're going to place all of our bets on co-working, which was still
actually,
early at the time.
Sorry to interrupt you, Jane, but one of our investors who is a very successful entrepreneur, angel investor, he was joking with me that we managed to choose the worst industry, the worst target market ever from the whole world. Like, could have been anything else, because there were probably just a few thousand spaces around the world at that time. So when you do the math, even
right,
and
that's what the investors want to see.
Way you can actually build a business around that, like a decent any business whatsoever, especially in the software industry where the investment to build a software is huge, and you certainly need enormous amount of customers to justify the initial investment and all that. So they were joking with me that we managed to just choose the worst target customer ever.
when you put your slide up that says total addressable market, and it's like
it's
1,000.
But it's funny, by the way.
Next,
3 years down the road, this same angel investor, entrepreneur, and person actually built the largest co-working space on the Balkans, which happens to be in Sofia, and it's also where we have offices at in.
Oh, that's so interesting.
Yeah, so he ended up building the largest co-working space now with more than 1,000 members in the city of Sofia. So I think, I of course I joke with him as well, because
of course, right? Does he use your software?
Yes.
Okay, good.
Yeah, although they're difficult customers.
I bet they are. I totally bet they are. Yeah, I mean the market is growing. What are we up to now? 20,000? I should know this.
Yeah, I think it's about that. Although we also struggle to
to count them. Yep. Yeah.
It's very dynamic.
It is dynamic, and there's a lot of growth in Asia, a lot of growth kind of outside of the US. So your users are worldwide?
Yes. Yeah.
So anybody anywhere in the world can use your software?
Yeah, so we probably serve about 80, 90 countries. But I would say that I think about 50% of our customers are actually in the US.
Okay, but 50% outside. And you have a significant team in Atlanta.
Yeah.
Yes, initiated by Michael
Hi,
Everts.
Mr. Michael Everts, yes.
I love
Nobody
his
asked
story.
me why we have an office in Atlanta, because
Right.
it's pretty unconventional for a European-based startup
Yeah,
to
to pick
actually
Atlanta.
to the US and pick Atlanta.
Yeah.
No one really understands the logic
Although
of it.
Atlanta has had a quicker than average recovery rate from the pandemic. I think more people going, I see, some of these comparisons, more people going back to the office. And there's tech and there's entertainment. There's a lot happening there. So
Oh, totally. Georgia Tech and SaaS is booming there, and there are now 3-4 unicorns, so a
yeah,
billion-dollar software
yeah.
companies coming out there.
Calendly's there. I'm a big Calendly
Yeah,
user. Yeah.
yeah. So I'm so happy actually with our completely random decision.
Right.
Yeah.
Totally. Well, I think that's like part of the special thing about our industry, because so Michael Efforts was an OfficeRnD user, and he was like a super user and so passionate. And you guys did like a road trip. I remember him saying, "Oh, OfficeRnD is coming next week. They're going to hang out." And I was like, "They're coming into Atlanta to see you, Michael?" That's a big commitment, given, right, when you come to the US, Atlanta's not usually your, on the list of sites to see. And then then he joined the team, which I love. So okay, so let's dive into the FlexIndex. And tell us kind of why you decided to do this, what the KPIs you're measuring. Give us kind of the intro to the FlexIndex. And it's on the OfficeRnD website. It's really easy to find. We've also linked it up in the show notes, so you can just pop over to our website and get the link to the page as well. And you can download it. It's a PDF, and you can see all the data we're going through. Although, Miro, I was thinking last night, so I was late prepping for our podcast because I was out of the office last week, and my daughter was at a math class, and I was like, okay, I need to read this. I need to put the dishes away. I need to do some gift wrapping. And I was like, this is why it's brilliant to put it on a podcast, because we can give people the highlights and they can just multitask instead of having to go through the PDF, which is also nicely done. So anyway, over to you. I'll let you walk through, and I'll jump in when I want to dig into something.
Yeah, so long story short, obviously COVID happened to our industry, and it was such a massive event that at some point we started to ask ourselves, what's actually the effect of COVID on our industry as a whole? So what really happens? And obviously we have a lot of data and that's collected in the platform about occupancy, bookings, and utilization of different spaces. And at some point, we decided that using this information in a completely aggregated and anonymous way can really help everyone out there to figure out if their space is developing or moving according to the whole industry, to the benchmark, or is it not? And we thought that by aggregating all of this information, we can help the entire industry get better and more advanced in how they think about their businesses and how they move forward. So we decided to hire data analysts and build a proper data team so that we can seriously try to figure out and spot what's happening in the industry and how it's developing, how things are moving forward, and how COVID also affected the industry. So we started with 5 KPIs. Just to start somewhere, we thought carefully which KPIs to choose. And so far we settled on these 5. So static occupancy of desks, then the revenue per available desk or workstation, so RevPAL. Then these are more on the let's call them assignable spaces, and then the bookable spaces. So We looked into meeting spaces, so bookings per meeting space, average booking duration for paid meeting space bookings, and then the total booking revenue per meeting space. So the last three are the more dynamic use of space, and the first two are the more static kind of occupancy and revenue based. And that's the idea. It's really to build out a free resource that can help the entire industry to see the bigger trends that are happening, and also I'm hopeful that this can be used in the future by landlords and developers that want to explore our industry and want to participate in my opinion, the best possible way through management agreement and partnership with Coworking and flex space operators, and yeah, work together to grow the whole flex space industry. So that was our idea. We want to try to build that regularly each month. So we'll see. It's very time consuming though. It's a lot of effort to pull it off. So we'll see how it goes. So far, it's been received very well. I see a lot of huge interest. So we might end up doing it each month, or we were thinking about each quarter, but because there is interest, we'll probably do it each month.
I know everybody wants the data, which I mean, I think this is kind of what you're thinking. You serve so many, operators, but most of those operators, they may be multi-site operators, so they have some sense of their own portfolio and the differences, but most operators are kind of sitting in their little silo looking around and saying, okay, how am I doing compared to the guy down the street or the guy in another city? And this is such an interesting time because geographies are, returning or recovering at such different rates. So, a question about, so tell me, static desk occupancy, is that, what does that mean? What is that unit?
So for us, static desk occupancy basically means whether a desk, being a dedicated desk or a private office desk, is on a monthly or yearly membership or some sort of a contract that says it's occupied.
Yeah.
So static means there is a membership or a contract for this desk in particular.
Like a specific sort of inventory desk, but not hot desks. So flex memberships not captured here.
Totally not captured. So static desk occupancy is purely for desks that are fully dedicated in some way or another.
Got it. Okay.
Yeah.
And then the revenue per available workspace, same thing. The available workspace is defined as a dedicated inventory of,
So that's a dedicated inventory of some sort. It's a single unit, so one desk, private office desk, or some sort of a dedicated unit, desk, workstation. And that's an aggregated view of the average revenue per available unit across the globe. But that also considers the currencies and all of that in a very advanced and proper way. So we wanted to see the global trends. That might actually be considered a flow of the index because it's a truly global index. So, and especially with COVID, and you mentioned, Jamie, that the whole world was weird. So we've seen lockdowns, and at the same time in one area and part of the world, and at the same time another area is completely wild and everything's open and working.
Right.
So
yes. Meanwhile, California just reinstated mask mandates for all indoor locations statewide.
Right.
So
right.
yeah,
I think
at
Texas,
the time of this recording
was a good example of everything's open and Texas is booming, and Melbourne in Australia it's completely locked down and you cannot leave house, which is obviously very difficult for the spaces. So when you consider that, it kind of has an implication on the global view of the index, because it's kind of flattening things out a little.
Right.
So in the future, we might consider also building more of a localized versions of the index, so that can be probably more helpful. Obviously, I think in the hotel industry and so many other real estate industries that are very sophisticated and advanced, these things exist and they bring tremendous value to the operators, because you can truly assess where you are in terms of rates and occupancy and all that.
Hey, I just wanted to jump in really quickly before we continue with our discussion. If you're working on opening a co-working space, I want to invite you to join me for my free masterclass, 3 behind-the-scenes secrets to opening a co-working space. If you're working on opening a co-working space, I want to share the 3 decisions that I've seen successful operators make when they're creating their co-working business. The masterclass is totally free. It's about an hour. It includes some Q&A. If you'd like to join me, you can register at everythingcoworking.com/masterclass. If you already have a co-working space, I want to make sure you know about Community Manager University. Community Manager University is a training and development platform for community managers, and it can be for owner operators. It has content, training, resources, templates from day one to general manager. The platform includes mini courses that cover the major buckets of the community manager role, from community management, operations, sales and marketing, finance, and leadership. The content is laid out in a graduated learning path, so the community manager can identify what content is most relevant to them depending on their experience and kind of jump in from there. We provide a live brand new training every single month for the community manager group. We also host a live Q&A call every single month so that the community managers can work through any challenges that they're having or opportunities, get ideas from other community managers, build their own peer network. We also have a private Slack group for the group. So if you're interested in learning more, you can go to everythingcoworking.com/community manager. So let's dive into the highlights of your findings, which are on the report that you produced. Do you want to kind of hit the highlights for us?
Totally, yeah. So what we're seeing is, obviously there was a huge drop in April. So overall, the index is a 5 components. So it's from 0 to 5 average, using the 2019 as a benchmark because it's a stable year. There is no COVID or
right. We didn't know what was coming.
Disasters around the globe. So we use it as a benchmark year. And then the 5 KPIs that we've put together make the index from 0 to 5. So if 5 is the average in 2019, so March, April, May 2020, we've seen the drop from 5 to 3.1, 3.2. So significant drop of how flex space has been used. And then it kind of stayed flat for a little while, actually for a year and more. And then things started to significantly improve in March 2021, and then going upwards from there for November this year, so last month, basically to 4.3. So we're getting very close to actually the pre-pandemic levels. Our estimation is that we'll see, let's call it the full recovery or a recovery of the flex space industry to the same levels as 2019. We'll probably see it in Q1 next year, maybe March. Of course, I mean, there is now Omicron and more uncertainty around that, which I'm personally hopeful that it's not going to create as big of a problem as so many people think, but who knows. But still, our estimation is that by March, things will recover as a whole. So from the 5 different KPIs, the desk occupancy was the least to fluctuate, actually. So the biggest drop was in March 2021, but it was gradually going down ever since the pandemic happened until
that's
March.
Interesting, isn't it? I mean, that's just kind of indicating the behavior of people sort of keeping desk memberships and then a real delay in sort of that hitting the bottom. Yeah, that's really interesting. I don't know that I would have guessed that.
This also has some, it's also kind of related to the fact that all of our customers are also doing yearly contracts, and especially in some countries, the license agreements that are mostly yearly.
Yeah, Miro, that's a great point that I just didn't think about when I was looking at that. Right. So people who had been hooked in, right, slowly sort of unwinding that commitment. Yep.
Yeah.
And then so people starting over, right? People may have been, we see that uptick starting like May-ish. I mean, kind of, up, down for a little bit.
Yeah, I think things started to go seriously up, and then Delta happened. I think this is visible on every KPI that we've put together. So Delta in I think March 21 was a big issue. But overall, after that, it's been on a positive trend. So all the KPIs been going up, including the occupancy, and even the occupancy rates will likely be on par with 2019 even next month, or maybe very early
after the holidays.
For the holidays. Well, the static desk occupancy, it's more stable, so it's less seasonal. So for example, the booking related things, they're very seasonal as well. So certainly December will be slower. You can clearly see all of them being slow in December, being slow in August, a little bit of July, and then very strong in October, November. So but the occupancy, it's more stable. Surprisingly or not, the revenue per available desk went down, and actually the drop was a lot bigger than the occupancy. So we assume that that's caused by people adding more, giving more discounts or even free memberships, just to keep the customers. So there is usually a saying that you can always keep your occupancy 100%. However, it's important at what price. So it's important to keep the revenue flowing. We expect that this actually will grow significantly in the future, to a certain degree, that things are recovering, but also I think now with the inflation and raising prices on all sorts of things, we believe the spaces should also start charging more.
Which is actually a great point. I work with a lot of operators who are very hesitant to raise their prices. If anyone's listening, January 1st is an ideal time. We're a little late in terms of giving notice, but as contracts renew, yeah, I mean, the cost of everything is going up. I'm in California. Our gas per gallon for the premium gas is $5.40 a gallon. So
Yeah,
I was just in San Diego. It's not as bad in San Diego, but it's certainly not as bad in other parts of so I don't know what our particular issue is, but certainly, yes, the cost of doing business is going up.
It's a global phenomena everywhere. The electricity, gas, construction materials, everything's going significantly up. So I'm sure the future spaces so that are coming to market next year, their cost to build will be actually a lot higher. So price inevitably should go higher. There is just no way to to stop that.
But I think the mindset piece of that, so I think it's helpful to see this data, because I think operators, when they're operating in a little bit of a bubble, they, the pain that they felt, as we see, lowering price to get people to stay, and then living with that fear of, if I change my prices, will they go? And they want to maintain that occupancy. So there's a lot of market dynamics happening right now, because demand is also increasing. And, some markets have less competition because spaces have gone out of business, and it's taking time to add new co-working or flex inventory, to a market. We've heard, that about markets, particularly in the US. So I think this is helpful in giving folks perspective in what's happening around the world, right? Occupancy is going up, revenue per available workspace is starting to creep up, although further from pre-pandemic levels, if I'm looking at this right.
Yeah, still 10% on the 2019 average, which actually, if you look at it, it's in the late 2019 was like 110% from the average. So the drop was more like 35%, which is significant for every business to sustain. So it's good, it's going up, not as fast as we were hoping to see, but steadily. So I think a lot more data actually can be uncovered on that point. And you mentioned something interesting. So obviously there is now a big difference in central city spaces versus suburban spaces in terms of occupancy rates and whatnot. So that also might be an interesting slice to have a look and maybe help people make better decisions for planning more locations in the future.
To your point, Miro, I'm right. You could spend a lot of your resources digging into this data. And so I love that you guys are kind of making the commitment to do this, because there's not a lot of industry data, right? We have very few. Do we have 3, I think, public companies in the space: IWG, Servcore, and WeWork. So there's not a lot of public data, and those are, look different than independent operators with, 1 to a few locations. So
totally. And I think IWG is the only company that can put together something like this at the moment. But they obviously won't, because it's a huge advantage for them having this data, and huge disadvantage for everyone else not having it. So,
right. Yes. So thank you. So right.
Yeah. Even WeWork probably cannot really make a good enough benchmark at the moment,
because as big as WeWork is, right, their N is still low.
Yeah.
Yep. Yeah.
So the last three KPIs were all about bookings, where we saw a massive drop. So obviously that makes total sense. I mean, if you're under lockdown, not making any bookings or whatsoever. So especially the number of bookings per meeting space dropped from a high 100 to as low as 20 points, so 20%, which is very dramatic utilization of the meeting spaces. Then it kind of started to recover, but not so much. There is fluctuations throughout the year, but it's still steadily recovering. So at the moment it's at 70 something percent, which is good. It's certainly recovering, and we believe if Omicron doesn't explode, that by Q1, at the end of Q1, the 3 different booking related KPIs will climb to the benchmark of 2019. Obviously, I mean, meeting spaces is a type of space that's more dynamic and certainly more prone to the circumstances. Even though people might keep their offices and desk memberships, if they're not going to the spaces, obviously they're not booking meeting rooms and so forth.
And then any variable meeting room booking was just gone. Yeah, that's a huge drop, but also a faster recovery. That recovery trend just looks better than I maybe would have thought, even though we're still well below 2019.
Yeah, it's surprisingly not as bad as I thought too.
Yeah.
Although if you look at it, so many spaces, this was such a serious part of their top line and their revenue, and if it stays for 2 years at 40% of what used to be a year ago, that's huge.
Significant, 100%. Yeah, and that's very variable. Some spaces rely heavily on meeting room booking. So Miro is
actually, like, from just observing some customers, and because obviously we spend a lot of time with them, we've seen a lot of meeting rooms also converting to private offices, and that type of changes are also happening, and it makes sense because private desk occupancy, as we saw, it's so much more stable, and also the demand for it. We don't have demand data, so we don't know that well on that front. There are other people focusing on this, you're doing a great job. So, but certainly on the occupancy level, we see the end result of it. So the demand is there. And I'm sure the demand for meeting spaces will come back as well. Something else that we are particularly excited about and want to develop in the future is looking into more of the truly dynamic use of space, not just the static desk occupancy, but also the dynamic utilization related maybe to using hot desks and unassigned desk memberships of all the different flavors, from day passes, hourly passes, to more of a monthly memberships and all that.
Well, and there are more flavors than ever before post-COVID.
Totally. And even like day offices, that's a huge trend. Like, and
so that's not really captured, the whole, like the office share, or is it captured?
No, it's currently not.
It's not dedicated. It might be dedicated to a few people. Yes, that was one of the hot topics in our Slack channel for OfficeRnD, is how to use OfficeRnD to manage office shares, and or buy a bucket of hours, because I mean, but that's why, your list, part of the reason I suspect your development list gets so long is COVID has really just changed. I think dedicated space will remain, the majority of the revenue for most spaces. But to your point, okay, how do we make up for meeting room revenue? How do we, get people in to use flex space? And this KPI, it occurs to me, is not revenue based. It's just people using meeting rooms. So it could be members with credits or members booking and not paying. So we've got, folks taking Zoom calls, and so that may be why this is recovering faster. But if we move through the KPIs,
well, there is a KPI for the revenue, by the way. That's number 4.
Yeah,
5,
I know,
so.
I'm kind of skipping ahead here, but yeah.
Yeah, which also is
that's actually better. That's recovering better than the bookings number.
Yeah, which is surprising.
Yeah.
But it's it's what we're seeing. So the booking revenue per meeting space is at 80% from what it used to be in 2019, which is very encouraging. It's coming back, and seems to be people are booking and paying for meeting spaces, which I also assume we see a lot more corporate customers and talking to partners on the aggregator marketplace side of things. So the demand side, there is a lot more interest from corporates for meeting spaces, for private offices. So we certainly probably see the result of that here.
Yeah, and a lot of offices, well, certainly where I am, still not open. And so if people need to meet, they need to do it. But, I emceed the Work Tech conference in San Francisco last week, which is really focused on corporate occupiers. There was one other flex person there, so we were not well represented, but it's so interesting. Well, and it's very specific to my geography, right? Because Northern California is just very conservative and very slow moving. But some Stripe, so I moderated a panel, the head of real estate for Stripe, an amazing woman, and she has people all over the world, and they're trying to figure out these policies of how to create an approach that works. It's super interesting to listen. And Miro, I know you guys are helping. You mentioned, we talked about the sort of co-working market being small, and you had so much demand for supporting, corporate occupiers in their effort to, go back to the office and book space and whatnot, that you're probably seeing some of that too. It's like they're just really trying to figure things out still. They don't know. And I think, right, we're still maybe not getting much of that demand because it's just not there yet. And I think a lot of
it's very difficult to pull it together. It's extremely difficult from a corporate point of view. Even at our scale of 120 people, it's so difficult to establish a rule that makes sense and it's usable and people like it.
Oh, exactly. And that was
if you put that at scale of thousands of people, I cannot imagine the context.
Totally. And that was kind of her. She was like, look, we're trying a lot of things and we're iterating. So 2022 is going to be, we're going to roll some things out and see how it goes. And we might have to, to sort of pivot their approach because they're really trying to figure out. She seemed very on board with flex, and I think they use a lot of flex in smaller markets. But the other just sort of sense I got was that corporate employees really like to be at home. They don't want to go to the office. And I think those of us who really love co-working are like, why wouldn't you go to a co-working space if you could? And I think we're just still not getting that demand. I think it's still in front of us because the corporate users still don't know about flex, and they're so happy to not have to go to the corporate office. They're just like at home. And some of them are solving the problem of, whatever, cleaners come and dogs bark, and, some of them are roommates and I can't be at home, right? But it's just like the overall sense I got was just like, yeah, these people really like working at home. So
Yeah.
I thought, okay, well, so it's going to be a while before, we start to, but, the meeting space, how do we get them to experience, what you described, at second home, like beautiful, like, why wouldn't you want to go there, but I think it's still in front of us. Humans are really like slow to change.
Yeah, no, totally. It's in front of us, and we're still yet to see this really converting into corporate users consuming flex and co-working spaces at scale. I think
Yeah.
we've seen just a little of it now, but there is so much more, and especially on booking meeting rooms for a day, meet private offices for a day, that kind of stuff. Because a lot of corporate employees will work from home, but at the same time, I mean, you have to work with your team from time to time. I mean,
Yes. Yep.
I don't know. I'm completely lost at home nowadays. I just cannot do it anymore. I want to see people, and I want to work with
Mhm.
the team, and just be out there and brainstorm and have the community around me. It's so much nicer.
Totally. I'm totally in that camp, which is why I was like, wait, really? I think it's just a different, because we get to really make that ultimate choice for ourselves. And so, but I also think, like, for co-working spaces, like, keep chasing the people who make the decision, because the corporate decision, I think, is pretty binary still. It's like, you're either going to the office or you're at home. And so this sort of in the middle, we'll get there, but yeah.
And we'll try to capture that also in the FlexIndex going forward. We'll try to see if we can dig out data to keep an eye on these trends. This is really the idea here, to see and spot trends that are useful for the entire industry, and can make help some people to make better decisions about their business. So I hope to be able to dig out some of these going forward, these trends in a in a more visible and justifiable way.
Yeah, well, right. And that could be a full-time gig for somebody making software. But so
Yeah.
the one KPI that you're tracking that we didn't go through is just duration of meeting space. So that looks like that, maybe didn't change a ton, took a while to come back, but that's almost back.
Yeah, which is that's also positive. So it
Yeah.
says people actually are spending now good time in meetings in the office,
Yeah.
which is very positive. Like from 60% down, from 100 to 40, now back to 93%. It's a very steady and good recovery. So people are going now to the office and spending good time in meeting spaces with other people,
And
which is encouraging.
paid, yeah, and this is paid meeting space. So I think that's really positive too. So this is not just a member who, booked your space and to sit for 5 hours on Zoom and not pay for that space. So hopefully if you're using OfficeRnD, your members are at least using credits and getting,
There was a joke about the hybrid way of working, that you can really get the worst of both worlds if you go to the office and you're a whole day on Zoom.
Right.
Like,
no, I keep talking about on the podcast, I have a neighbor that works for Facebook, and she's like my little like window into, what's happening in these big companies. That's exactly what she's doing. There's an office that she didn't used to have access to, that is much closer to where we live, instead of driving all the way to Menlo Park where Facebook is. But she just goes there, and she says, well, the office is open, the gym is open. I don't think the food maybe was open yet. So she said she walks down the halls and all the meeting rooms are full of people like on Zoom. And that's a really international company. So I think they're on Zoom a lot anyway. you know, so, but she, yeah, it makes her happier to go into the office and sit on Zoom than sitting at home on Zoom, because she likes the amenities that are starting to open. I think she could, you know, I mean, Facebook has a lot of amenities, which was also kind of a big discussion. And I need to find a way to translate this to co-working, just like, you know, the amenities that the big companies are kind of putting in place to compel people to come in. It's, you know, it's pretty meaningful. So I'm not sure.
If you figure this out, that's going to be huge. And also from a company point of view, since we are in a co-working space, and we want to have the same amenities that Facebook is offering. So, but we don't have the people resource to actually pull this off and make it available to employees. So if the space can do that, it's huge. It's a massive win.
Yeah. And you're in a big space, so they may have the scale to be able to do some of those things. Yep. Yeah.
Yeah. They are trying. Yeah, but it's not easy.
Yeah. Miro, anything else you want to draw attention to before we wrap up?
No, I think overall it's I'm very positive, very bullish, as I mentioned. I'm also very open to feedback. We'd love to hear your thoughts on KPIs, on data that you want to see here that can really support your businesses better. So if you have any thoughts and feedback for the FlexIndex, feel free to reach out to me directly, Miro@OfficeRnD.com, or our team. We are all very open, happy to chat about that, and I'm sure we can listen well and hear your feedback.
Miro, that's a very nice offer. And I'm sure that your inbox will be full of suggestions. Everybody loves data, right? It's just like, you know, suggestions on software. The work that you do is never ending. You get one thing checked off the list and then something gets added to the list. I think it's the same thing probably with slicing data. So that's a great offer. I'll put Miro's email address in the show notes, and then we'll link to the FlexIndex, which if you're listening and want to go find it, it's at OfficeRnD.com/FlexIndex, and you can download the beautiful, easy to read PDF and get your eyeballs on the data that we just talked through. Well, Miro, I'm going to let you go. It is now after 8 o'clock and you need to get some sleep and have a nap before you have to get up in the middle of the night to help. Thank you for sharing.
Yeah. Thank you so much for having me, Jamie. It was so nice to discuss all of these, and yeah, beautiful.
Yeah, it's super helpful perspective. And please thank your team who is working so hard, your new team members, on pulling the data and pulling the insights. We really appreciate it.
I will. Thank you. Have a good one.
Thanks, Miro.